Hello, you're joining us back at Dukascopy TV HQ. Now for today, we're going to be taking a closer look at Switzerland and the SNB. Joining me is Patrice Gautry of UBP. Patrice, thank you so much for coming in today. It's a pleasure having you.
Hello, and thank you for inviting me.
Okay, so data recently released has indicated an increase in the amount of cash that commercial banks are holding with the SNB. Now, we've got a variety of reasons to explain this. Some have indicated that it is partly due to banks looking for a safe haven, which, as we know, Switzerland has been historically for some time, but also due to efforts by the SNB to support this 120 cap. Despite a lot of criticism aimed at the SNB regarding central bank manipulation, is this indicative of the financial community's support of this method?
As you know, the SNB has to intervene in the market to support the currency, and so high level of liquidity is the result of this forex intervention by the central banks. What you refer to the increase of the excess reserves of the commercial banks within the central banks is the result of some repatriations of profits. So this is more a seasonal factor rather than an indicator of confidence. But it is true to mention that the action of the SNB has not been challenged by the markets. That is, a high level of confidence has been invested in this action, and we do not see any negative developments coming from the currency market. The SNB has maintained its credibility and has further tools to intervene if necessary to maintain this credibility.
If we consider then exit strategy for a moment, and in September, SNB Chairman Thomas Jordan cited that the Swiss cap was indispensable. Now, the fact remains is that at some point it is going to have to be dispensed of. How will the central bank go about this, and can we expect some level of currency pushback, do you think, when it does eventually end?
My scenario favors a sort of natural end of this minimum exchange rate. That is to say, the SNB action is based, in fact, on two risks. The risk coming from the Eurozone and the risk attached to the deflationary spiral within the Switzerland economy. So at this point of time, if we consider that confidence will continue to increase in favor of a recovery scenario to the Eurozone, we should have a natural depreciation of the Swiss franc. That is to say, further support to the currency will not be necessary. So this is my scenario, to consider that it will end naturally as the confidence and growth will continue to increase in favor of the Eurozone and the Swiss franc to depreciate naturally.
Similarly, then, what global economic indicators are the SNB going to be looking for in order to end that cap?
The action of the SNB is based on risk management. As long as we have still risk in this global economy, this specific measure regarding the Swiss franc should remain in place. The two major risks are the growth or the systemic risk in the Eurozone, attached to the Eurozone, and another sort of risk could be the ECB monetary policy. That is to say, if ever the ECB continues to decrease its interest rates, it should depreciate further the euro versus the Swiss franc. So, in regarding these two risks, systemic risk attached to Eurozone and the ECB development in terms of monetary policy, the Swiss National Bank should maintain its measure in terms of minimum forex exchange rate.
And lastly then, Patrice, I just wanted to touch lastly on the Swiss banking industry itself. What would you say to recent comments from Switzerland's finance minister that Swiss banks can handle stricter capital rules regarding their equity to assets ratio?
So we know that in Switzerland, the two major banks, Credit Suisse and UBS, should or may represent a systemic risk for the economy, for the global economy. So from an economic point of view, it's totally justified to create buffers and to have some requirements in terms of capital in order to avoid these systemic risks. So how much, at which level should we settle these minimum requirements in terms of capital? This is a question that has to be debated with the different parties and with the banking sectors. But for sure, it's necessary to create some capital buffer in order to avoid any systemic risk.
Patrice, thank you so much for your market insight today.
Thank you for your invitation.
That's all we've got time for right now, but don't go away. I'll be back shortly with plenty more exclusive interviews for you. Goodbye for now.